Hey everyone, and welcome to this week's episode of Trade the Chain. It is Friday, November 13th, and as you can see from a couple of the people on the screen, we are halfway through Movember. I'd like to say once again, joining me is my co-host Ryan Gorman, as well as we have our two fantastic analysts that everybody loves from Market Rebellion Crypto, and that is CJ and Monty. Once again, telling us where the markets are. We have a pretty positive run the market this week. Everything seems to be uplifted on good sentiment, and we only have a hot list. So we'll cover Yearn Finance, Uniswap, and guess what's back in the game? It's Sushi. Just when you thought it was all going to disappear. That, and then Ryan will be covering the news. We got PayPal opens crypto up to the masses. We have Gary Gensler, former chairman of the CFTC, who is joining the Biden transition team. And then a big surprise, Celsius website goes down, and what will this mean for its thousands of users? Because right now there's a few of them worried on social media. But first, I want to go to Ryan. We got a couple different plugs to do in the beginning here. We'll get them out of the way, so take the floor.
Yeah, guys, if you haven't checked us out at tradethechain.com quite yet, it's our service that enables you to trade like a crypto insider, right? You get sentiment alerts, you get tweet volume. We are able to surface listings and other important developments in the markets before they hit the general public through a number of our data scrapers. And if you want to check us out, we're at tradethechain.com. We give you a 14-day money-back guarantee for whatever reason you're not happy with the service. But with that exclusive online community we have of active traders and crypto enthusiasts, it would be hard not to be satisfied. Tradethechain.com.
Yeah, and it's beautiful interface too. Really well done by these guys. The other plug that we're going to talk about is our crypto service at Market Rebellion has now launched as of Monday. So we have trade alerts, trade ideas, a charting platform, a cryptocurrency education curriculum. We're going to be adding some more stuff in the coming weeks. But if you'd like, you can sign up for the first month for just $1 and get our live trade ideas in real time. We're also putting together a macro portfolio and a DeFi index. So make sure to stay tuned for that as well. But without further ado, you guys want to go to the big boards with BTC.
Let's do it.
Good, man.
All right. So just a little brief recap of our price action. This is what the Market Rebellion platform looks like now that it's complete. But we did have a trade insight earlier on the week on Bitcoin. And essentially what we were recognizing was this ascending triangle breakout pattern. So if I look here, this is kind of the price action we had leading up to this week's breakout. And this ascending triangle, when you are already in the midst of an uptrend, typically we have a roughly 70% probability that the asset's going to continue its uptrend. So we were looking for that, and I was looking to buy that on the breakout above the previous swing high of 15,800. So once we went above that level, that was a good enough entry for us to get in and are members for our service. And as you can see, we had a nice little pop from that ascending triangle to about 16,400. Now we're retracing a little bit as the bulls continue to take profit, but I'm still bullish. There's no reason to sell this, in my opinion. I'm looking at this 15,800 level as strong support. As long as we remain above that level, I'm still going to be bullish. But as we have some profit taking, I could see a potential retest of this level before another swing higher. So I am still bullish. That is my current view on the markets. Maybe Monty sees things.
Come on, Mr. Short. What do we got, Mr. Short?
Okay, yeah, no, so I totally agree with everything CJ said. The technicals for this run up were pretty picture perfect here. We had that nice ascending triangle. But for me, one thing that I didn't see with this run up, or it's kind of been happening this entire bull run that I'm still waiting for, is for the altcoins to kind of move up with Bitcoin. And that's sort of been lacking for me, which is kind of indicative that the capital that's flowing into the space is all going into Bitcoin. And there's going to come a point where just because of market psychology, people are going to start looking elsewhere for money-making opportunities. And in my opinion, this whole space is a space that is gonna rocket, and it's gonna be, I mean, this is the future of finance. Not every project will succeed, but many of them will rise in tandem with Bitcoin when we get that big pop eventually. And we haven't seen that yet. So for me, what I think may be happening here, and CJ pulls up the Bitcoin dominance scale, we're seeing a bit of a drop off in Bitcoin dominance. So I think some of this capital is starting to flow into altcoins. And it may be the reason why we have 3 DeFi projects on our hot list, because people are starting to take some profit in Bitcoin and look for other ways to make lots of money. So
Monty brings up a good point. One thing I just want to finish on is like, when you see the total market cap of the cryptocurrency market cap increasing and you see Bitcoin dominance flat or decreasing, that means people are coming into the space to speculate on altcoins. And that's something we look at pretty regularly. But sorry, go ahead, Rye.
Sorry about that. Looking at what's going on with Bitcoin and its price action, and what's going on in the options market at the CME and elsewhere, a lot of people have been talking about how this run up is more institutional based than retail based, and because of that difference, that's why they believe, at least, that it's less likely to have the drawdown that we've seen in previous run ups, like in 2017. I mean, is that what you're seeing, that it's more institutionally driven this time around versus a retail FOMO push higher?
Oh yeah, I would 100% say that this feels like a much more legitimately sustained bull run than we've seen in the past. We actually had Pomp on our Market Rebellion roundtable earlier this week, and he mentioned that exact scenario, that this feels different because of all the institutional interest and the interest from just big names like Paul Tudor Jones. So this is definitely different in terms of market psychology. Whereas in 2017, we saw people on Coinbase like just frantically buying Bitcoin and frantically exchanging that for altcoins, and it was a whole mess. This is definitely a cleaner and more organized bull run. So yeah, I think the spillover into altcoins is going to be less substantial, but I do still think that although the institutions are primarily getting into Bitcoin, when the space rises up and when the institutions elevate Bitcoin, I think other people will try and get into some smaller altcoin projects. Like the retail interest will still be there for those altcoins as well.
I think Monty makes a good point. And another thing Pomp brought up that I never even really thought about was the concept of nation states and central banks holding Bitcoin as a portion of their balance sheet to hedge. That's something we might even, if we see one domino fall, that's going to be pretty amazing. But
I think that's really likely, CJ. And you're right, that will be the trigger.
It's almost like a 21st century gold standard. So pretty cool stuff. And yeah.
That could be the impetus for the whole digital gold prophecy coming true. I mean, the U.S. government's already holding $1 billion worth of Bitcoin anyway after their latest seizure.
Yeah, I mean, you're right, Ryan. Like, if this thing goes to, if central banks start putting this into their balance sheet, it could be parabolic for the price in a really nice way. What do we have with Ethereum, speaking of all the DeFi boats lifting up in the sea today?
Ethereum's pretty similar to Bitcoin, right? Like if I go into the 4-hour time frame, it's got a very similar ascending triangle formation that was what we talked about with Bitcoin and led to that recent breakout.
Yeah, the difference here, I think, is that we talked a lot about it last week, is how this Ethereum run up was kind of fueled by not only speculation, but also fundamental advancements they made to the project with Ethereum 2.0. So I think we're seeing a little bit less of a pullback than we can expect to see with Bitcoin. Also, just the price. I think with Ethereum at 470, there's some pretty good support levels below it. I think it could catch support at 450 if it starts to dip, but there's still room to the upside. I think it won't hit significant resistance and a significant reversal until maybe 500. We saw that happen for Bitcoin at like 16.5. It pretty much perfectly bounced off that. But Ethereum kind of has less upward resistance. So I don't expect it to kind of dip if Bitcoin does dip. And yeah, this could be one of the projects that benefits from capital flowing out of Bitcoin into the altcoin space.
Given what we're about to talk about in terms of the DeFi train raging on again, do you think that what's going on in the DeFi space is kind of bringing Ethereum upward with it? And as long as DeFi, as DeFi goes, maybe Ethereum goes as well?
It goes along with that theme that Monty mentioned earlier of like Bitcoin dominance decreasing while the total market cap increases. It means people are going towards speculating in the altcoins as opposed to just institutions buying Bitcoin as a store of value. I'd say the main difference between this market rally collectively in 2017 is because Bitcoin has been driven by institutional buying. And we can go through a couple of different on-chain metrics that can pretty much verify that. That being said, there's still enough retail interest and retail money to drive a lot of these altcoins to all-time highs as Bitcoin becomes more and more popular. And one thing that I really like, I didn't even really look at the Ethereum trade or the Ethereum chart before we started streaming, but this is a perfect ascending triangle. Not only is it a perfect ascending triangle, but you have a green 3 on the sequential indicator that is closing above the previous 2 swing highs. This is a really bullish trade that I like, very bullish setup. So just thought I'd mention that. The only reason I'm using TradingView still as opposed to our platform is because it has the sequential indicator. We're getting the sequential indicator in our platform in like a week, but really bullish.
Yeah, and it's not just the technicals. Like Ryan mentioned, like we're talking about this DeFi boom. And when we saw that DeFi boom earlier this summer, there was a massive spike in the price of Ethereum. So the technicals are here. This is looking like a nice ascending triangle, but also the fundamentals of just DeFi, kind of the capital that flows into DeFi is very good for Ethereum. So I think as that happens and as we see people taking profit on Bitcoin, like we talked about, I think there is some significant upside here.
So do you think that investors and traders who might be weary of some of the volatility in the DeFi space, do you think that allocating to Ethereum could be kind of like an ETF would be, like a broad index-based ETF in the retail world? Like investing in Ethereum gives you a little bit of exposure to all of the DeFi projects in a way, does it not?
Oh yeah, absolutely. And that's a good way to put it. I kind of think of it as like just a less volatile way to get into the altcoin space, really. I mean, and then you can take a step back from that and kind of Bitcoin in a much broader way gives you the same exposure, just less volatile than Ethereum. So I think, yeah, I think if you believe in the DeFi space and you don't necessarily want to risk getting exposed to that volatility of any one individual project, then yeah, ETH is a great way to expose yourself to the upside of the space.
Well, it looks like it has a pretty good run going up towards the 500 mark, which is, I mean, let me tell you something. It's even ridiculous just to see that as, 480, 490, 500 is a future price target here on this triangle, because it wasn't too long ago in the throes of crypto winter in end of 2018. We're trading Ethereum at $80. It's ridiculous. I mean, listen, good news, and this plays out really well for all the folks who are who have their piggy banks in Ethereum that are trading, like whether they're on Uniswap or somewhere else doing DeFi swaps with Ethereum. So, I mean, their piggy bank's growing when it's not being traded. It's really a win-win so far. And keeping with the DeFi theme, what Monty said, we only got HOTS really on the list, and there's 3 DeFi projects. So the first one we're going to cover is Yearn Finance, ticker YFI, and see what this is doing, because we actually haven't spoken about any of these tickers in a little bit due to the market conditions.
Yeah, so this is like particularly interesting because we have a confluence of technical indicators, and also, like we mentioned, there's sort of this larger picture of Bitcoin dominance slipping a bit just because it had gained so much ground previously. But as you can see, we had a steady rundown since the high, and it really was looking pretty bleak if you got in anywhere near the top there. So we've talked a lot about how a lot of these projects need to be accurately priced in, and that takes time, and it takes people kind of understanding what value they bring to the table. So here we saw, I mean, that's a long, that's a lot of red numbers in that rundown there. But we get a
It's like
perfect
7,000 range right there.
yeah. Yeah, that's a pretty significant drop, like 40% or maybe even more. But I mean, for it to bounce off that doji candle there, the red 2, and now start moving upward, I think is very bullish. And then it started to correct a little bit, and that's when we saw the Bitcoin dominance start to pull back a little bit. So I think if Bitcoin does continue to pull back and people continue to take profits, this is where we're going to see the upside in the spaces with projects like this that had been experiencing an extensive down run for the months prior as Bitcoin was sort of running upwards. And we talked a lot about how we didn't see the sort of confluence between the assets that we typically see. I think now we're going to start to see that confluence play to the benefit of these DeFi projects.
How much room do you think this rally has to run? I mean, because it kind of shot up really quickly the last time it went on a bull run, and the drawdown was so prolonged that I know some people might be weary given the volatility on the token even this week.
So one thing that we should remember is that volatility does not necessarily equate to risk. It does when you're dealing with assets that are slightly unproven, such as this. But I mean, what you want to look for as a technical trader approaching these is when you're trading sequential, you can see that we've got a lot of these red 9s, and they still did not break the rally. We kept going down even after we were oversold and kept hitting these red 9s. But now, since we've hit so many, and since we've actually seen a rebound after the red 2 doji that Monty mentioned, we actually have seen bullish follow through. And what that leads me to believe that this may be a tentative bottom and that this rally may continue. That's what I see on the technicals. Pair it with those fundamentals that we talked about earlier, and I'm pretty optimistic for YFI.
All right. Well, I mean, onto Uniswap, obviously a big staple in the DeFi game. Uniswap, UNI, the ticker, also kind of riding the wave here. And what are we looking at with this? I mean, how active or inactive has Uniswap numbers become? Let's say over the course of the last month. And I say month for user snapshot because, to Ryan's point and obviously the chart's point, we had things like Yearn Finance hitting all-time highs, and Uniswap becoming extremely active. Do we think that platform has lessened any inactivity, or has it just been the same flow of people coming in and testing the waters?
Yeah, that's an interesting point. And looking at the chart, I mean, the price action is almost back to where it was a month ago. We broke through that price. And to me, that is indicative of the fact that there are new people getting interested in the space, or in Uni specifically. So I think that there is that's very a bullish sentiment about the project. And I mean, it's kind of the same exact thing that's happening with Yearn Finance here. Is the Bitcoin is, people are starting to take profits on Bitcoin and look for profits elsewhere. And with Uniswap and we're going to talk about Sushi in a bit. These projects have been higher than they are currently, and because of that, I think people are willing to get into them. But speaking to what Ryan mentioned earlier about how people may be like wary to enter the space because there was such a strong drawback, I think that is still a concern that people should look out for, because the drawback with Bitcoin is not going to last forever. So it only has so much room to pull back. And once that does happen, people are going to look to start buying into Bitcoin again. So it's hard for me to definitively say that this is going to be a sustained bull run. I think the bull run will last as long as Bitcoin is able to pull back. So for me, this may last a bit longer, and it will be a significant rally if it continues, but it's not going to be sustained over time.
All right, cool. Well, Go ahead, CJ. Sorry.
No, I mean, just finishing on what Monty was going to say. I mean, essentially it comes down to the fact that these are just really high beta names. And what that means is that they have higher volatility when compared to Bitcoin. So therefore, they're a really good friend in a bull market, but they're a horrible enemy in a bear market if you're losing money. So.
Oh my gosh! And one of those horrible friends in a bear market was Sushi. So let's get some takeout here and talk about it. How did this make it back to our hot list? I mean, most people had almost written this thing off.
Yeah, including us. Yeah, I mean, they're just all the same chart. We Yearn, Uni, whether it's Sushi, all these assets are the same chart. I mean, they rebounded last week around the 5th, and we've just seen a steady uptrend ever since. And so very highly correlated assets. The thing that I was going to bring up that I showed when Monty was speaking was the fact that while, the DeFi craze of September has passed, there's still a considerable amount of money going into Ethereum specifically for DeFi. As you can see here, over 350 million went into DeFi from Ethereum just last month. So we'll have to see how those numbers shake out this November, but it doesn't look to be going away yet.
And look at that, in March, 2 million in March. And it's been just a huge rise, man. I mean, this thing has just shot off. It's crazy. I was going to bring up this chart when you were looking through it before. Hey, quick question. Does anybody know where the chef is these days, or no?
No idea.
There was dead silence on that one.
Probably on an island somewhere. I don't know.
All right, let's break out to the news, guys. Three really big stories that we wanted to hit that happened this week. One is PayPal has opened up crypto to the masses. This is big news for the retail people. Ryan, I mean, go over why this is such a big step in the progression of crypto.
Sure. So people had to, if they wanted to buy or sell or hold crypto, they had to go onto a platform they may or may not have been familiar with. A Coinbase, Cash App. They had to download something that they haven't used before. PayPal bringing Bitcoin trading, buying, selling, and holding to their users in the US puts an on-ramp that everyone's familiar with. Everyone's used PayPal to send money to or from their parents, to pay for something on eBay, to buy something on another e-commerce website. And this is where the rub is, right? So we can buy, sell, and hold Bitcoin now. But starting next year in January, part of their announcement is that you'll now be able to buy and sell things anywhere PayPal's accepted using Bitcoin. So now we can buy that cup of coffee with PayPal. There are plenty of coffee shops in New York and Philly and Chicago that you can use PayPal and just pay for things at the coffee shop, the same as you would with Google Pay or Samsung Pay or Apple Pay. And that use case now exists. I'm not sure what the tax implications there are, so I personally want to hold off on buying a cup of coffee with Bitcoin and paying all kinds of tax on it. But I think bringing Bitcoin to a much wider audience is only going to further engagement with crypto. And I think it really puts a built-in base for the price that I'm no analyst. I'm not Monty or CJ, but I can't imagine Bitcoin going much further down than it is if you have this built-in base of tens of millions of PayPal users in the US that will soon have access to Bitcoin.
Yeah, some people will give two sides to this story on, not your keys, not your coin type of thing. The difference between, let's say, a Robinhood or a Coinbase and how it purchases it, right? So in Coinbase, you have your keys when you take it off of Coinbase and put it into your Ledger hardware wallet. When you buy something on Robinhood, it is Robinhood buying something on behalf of you, but you don't actually own the crypto per se. It's assigned to you. But, in that argument, it can be said, this is about as easy can get to have your grandma buy Bitcoin, Ryan. And I think no matter what the particulars are, it's a step in the right direction.
Absolutely. when you look at Cash App generating over $1 billion in revenue for Square in the third quarter, just buying and selling Bitcoin, the sky's the limit for how much revenue this can generate for PayPal, and the ripple effects. Other payments platforms are going to see this, and they're going to want to jump in and get a piece of the pie that Square and Cash App and PayPal have. And it's only a matter of time before there are even more easy to use fiat on and off ramps for Bitcoin. And it just feels like when you look at a classic adoption curve, we're so far into the beginning. It's like the first inning of a baseball game. Right now is where that adoption, that mass use case is really starting to come to fruition.
And the big winners behind this are, of course, Paxos. Paxos, which is a big player, regulated crypto exchange and broker in New York here. And, they did the PayPal deal. They did the Revolut deal when it happened with Revolut. They're really the big beneficiaries as well as PayPal and Revolut into this. And another big step in forwarding everything, Gary Gensler. He's former chairman of the CFTC. He is now joining the Biden transition team into the president-elect's transition as we go through it over the next 3 months. But he's been a crypto-friendly person, and now that he has the ear of the president and some other incoming president and some of the other top people there at the White House. This is big news too, Ryan.
Yeah, and it comes as a surprise, right? Because a number of Democrats that have previously spoken publicly about crypto and Bitcoin weren't too friendly towards it. They weren't in favor of it. One even wanted to ban all crypto transactions in the U.S. So having Gensler on his transition staff, I'm curious to see what Biden's view on crypto is and how policy shakes out over the next 4 years during his administration. Gensler, having him there could also potentially lead to crypto-friendly regulators or commissioners at the SEC, like perhaps Hester Peirce is elevated in her position as well. And by having multiple crypto-friendly regulators in the US, we might finally start to get that regulatory clarity. We might actually see a Bitcoin ETF. I know I'm putting the cart before the horse here, but there's a lot of work going on in the background behind the scenes towards that Bitcoin ETF. And Gensler being part of Biden's potentially his cabinet or policymaking team, I think it goes a long way towards moving us in that direction, if not immediately, then down the road.
Yeah, and regulation kind of brings me to my next news story that we're covering, and that is Celsius, a very widely known borrow lend in the crypto space, had a website go down. And there's a lot of people who are talking about regulation with crypto borrow lenders in the space, because right now they don't have that title leash. And I'm not saying, listen, we're not saying there's anything wrong with Celsius here. There was nothing to do with their funds. It was an apparent thing that's happened to their website, but it is important. And it scares the heck out of a lot of people. And we're gonna follow this up with a short story that also came out this week that shows the dark aspects of it. But Ryan, and everybody, what's going on with this? Because it almost is. I think he's handling it okay, but it's embarrassing.
It's a really bad look. How is he going to tell people that they're rated for 10 million users, but only 217,000 of them can use it at once? What does that even mean? I genuinely don't think there's anything nefarious going on here. It's clearly a tech issue, and Bank of America's online access goes down as well, but it doesn't go down for days at a time. And you're not being told to stop checking your balance or conduct transactions on their service so other people can use it and be a banking community. It's very odd. And I'd rather reserve judgment, aside from saying it's odd, just looking at it from the outside looking in. till it kind of shakes out to get the website back up. And I guess one more question I would have is, why did they use GoDaddy for their website? Why wouldn't they use like, or Microsoft, or, something that's built for commercial use? GoDaddy is for like my brother's website. Like it's not to be something like for this amount of users. I have questions, but I'll reserve judgment aside from that,
Well, somebody should have raised their hand at some point along the way, right? So GoDaddy, widely known company, huge, big registrar in the space, if not like the biggest, I think. But, to your point, it's, hey, if my brother wanted to create a blog, we'd register at GoDaddy. But then again, you go back to the entrepreneurship, right? And what do all of us do, in a coffee house at night with our friend when we come up with a great idea? We go to GoDaddy and we get the domain. The problem is that somewhere along the line, as this idea in a coffee shop actually began to work and users began to pile on, is that when they hired their first CTO, somebody said, hey, maybe we should switch the domain at this point, right?
But yeah, saying, right, even for my website, I registered it using a generic domain registrar, but it's hosted by Google like Enterprise. Like even from my website that no one cares about, I still have it on Google Enterprise. So like, why wouldn't Celsius do something to that effect too? It's confusing.
If you're watching this episode, everybody just go directly to his website and let's see if we can crash it. The other borrow lend story that popped out, and I threw it in our internal Trade the Chain chat, as we were going on air here, is Cred. And Cred, this is turning out to be a nightmare. So last week, we find out that they're declaring bankruptcy, and they're a borrow lend shop in the crypto space as well since 2018. One of the founders is former PayPal mafia guy, as they like to call themselves. But the thing is that there's some shady stuff that has come out since that bankruptcy filing. And I mean, this is really challenging the belief system, I think, of the retail user. And I really hate to see news like this happen and then have it followed by like website downs at another company. I mean, everybody throw in your 2 cents on this nightmare.
Yeah, I think it's no doubt a red flag. I mean, you don't ever want to see anything like this happening. Just looking at like historical precedents, whenever there seems to be any sort of like lack of transparency between the service and their customers, it's typically not good. Like you don't want any sort of withdrawal limits, or you don't want the CEO of Celsius telling you not to check your account balance. That's, to me, I would be very concerned. But yeah, this is like, so crypto already kind of has this black sheep reputation in finance. And I think when you add borrowing and lending on top of that, which even in traditional finance is like kind of the, I don't know, it's just, there's going to be uncertainty. There's going to be red flags. There's going to be all sorts of rates that look too good to be true, and they probably are. So when you see something like that, I mean, you need to learn to identify the red flags, and there are plenty of them in this space. So yeah, if you're watching this, just watch out for things like people telling you not to check your balance or inordinately high interest rates. They're probably too good to be true.
I mean, it looks like this guy Shat, and I wanted to say that, this guy Shat and his partner Hua, they took depositor money. Well, one part of it is they took depositor crypto, turned it into yuan, and into fiat essentially, and sent it over to be invested in a company that does microloans, which fell apart. And then another one is put $10 million, invested creditors' money again, $10 million. There's Shat right there. And then they took $10 million and they invested it into a hedge fund that didn't exist.
What's the due date? Jesus.
It's unbelievable.
I mean, this is a lot worse than someone saying don't When someone tells me not to check my balance, I take all my money out immediately.
And you could, yeah, and you could see, I mean, scrolling up, you could see one of my clients is named in here because they're listed as a creditor, but JST Capital here out of New York, you know, doing business with them, you know, thinking everything is on the up and up. It is.
That's quite the line right there.
That's true. It's, yeah.
I mean, nah, that's crazy. How does all this money go missing? And they just they think, wow, I'm speechless at this one. I'm not often speechless. I have lots of words in me, but not this time.
So I mean, I thought we were beyond this this type of crap in the grown-up side of crypto, but apparently not. You know, crypto is always trying to constantly build up their reputation. This guy just shat all over it. So we got to stop because I'm just having fun with that too much.
I mean, this is not helping anyone. All these, if this is an exit scam, I mean, this isn't helping anyone. And it just, this and $500,000 price targets on Bitcoin by the end of next year, none of this helps.
Oh, look, our good friend Nathan DiCamillo wrote this, Ryan.
And Nathan, article.
Yeah.
Good for him.
So, all right, that's it for this news. One of the things, you know, be careful where how you're going to trade or what you're going to do this weekend. The markets are obviously have been on fire. You know, Mr. Short over there, Monty didn't really say if he's going to take a short position or not. But I mean, you know, the hair on my neck is tingling a little bit with the Bitcoin market, but I obviously want to keep seeing it go up. Everybody needs to definitely check out the new Market Rebellion crypto website. They got some real stuff in there. It's $1 for your first month just to try out that product, take it for a test drive. And I don't know if that's going to stay, so you may want to try it now. Also check out tradethechain.com, 14-day money back refund, no questions asked. And one of the things that I think we're going to do, because Market Rebellion is just out of the gates here and on fire, is what we'll do midweek maybe, if the guys aren't too busy, is we'll do a solid little like 15-20 minute episode where we'll walk through their whole platform and have them show us exactly what is available for everybody and all the tools and the chat and everything else. So that way you guys have a firm behind the curtain understanding of it. Until then, have a great weekend. This is me, Ryan, Monty, and CJ coming to you, and stay good, guys. Thank you.
Thanks, everyone.
Thank you.